Hey everyone, welcome back to another Impact FX video. Today, guys, we're going to be talking about how to change up the way you backtest. So, guys, first and foremost, before I start talking about what I'm going to be doing today and how I want us to retrain our backtesting ideology, is we're going to go look at one of the biggest pieces of software that I think a lot of the industry now uses, which is called Forex Replay. And we'll show how, a lot of people that I've seen in the group or in the free YouTube Discord channel or just in YouTube in general when they're talking about backtesting and how to create a system, this is the approach they take. And I'll start to break down why I believe that that's an inaccurate approach and it's actually probably stunting your ability to get profitable. And what I did from a personal perspective, once I started realizing these issues with these antiquated, in my opinion, ideologies, and how I started creating my own data, and how you guys can up your game in terms of pushing your trading careers forward. So let's get into it. Okay, guys. So here we are at one of the, I think, one of the most popular backtesting suites that a lot of YouTubers talk about. So the premise here behind Forex Replay, guys, is that you can collect your data on different strategies to see how well basically you can do, right? So you can click here, you can create a strategy, you can create a description, you can create your checklist, and then you can create like a session. So let's say we have a session, we're trying to do 100,000, and we're going to select Euro USD. We're going to start from November all the way to today. Strategy doesn't matter. And we're going to go YouTube. And I don't know what this exactly means, but okay, so now we've got this session, right? So now I can go in and I can start to backtest. Now, the classic way that someone will backtest, right, is they're going to create this system and they're going to say, okay, well, I'm going to draw, my zones, here. I'm going to draw my zone maybe here. I'm going to draw my flip zone here. And then what they're going to do is we're on the 4-hour chart, right? So they're going to start clicking through and they're going to say, okay, well, I'm going to go click here, click here, click here, right? And they're moving 15 minutes at a time, okay? Now, the whole premise, and I'm not going to spend too much time on this, folks, but the whole premise behind this is I've just moved 4, 6, 7, 8 hours at a time, and then maybe this gives me a trade, right? So let's see if this ended up giving me a trade or breaks. Okay, so here's the problem. This price action, if we go to the 15-minute chart, okay, inside of this zone, if you don't have your system mapped out like I do, there was, from the time the zone was tapped to the time that the zone broke, which for some of you, you'll be selling this whole time, which is ridiculous, is 4 hours. But we literally just went through all that price action in, I think, 20 seconds, right? That's not helpful. It's not helpful because what's going to happen is you're going to sit on the 4-hour chart and you're going to see, oh, well, I clicked this button 5 times and price broke this zone. So clearly I wouldn't have taken a trade. There's no good trade there. But 90% of you folks would have taken a trade there. 90% of you would have probably just stacked on and tried to sell here, 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 and you're selling the whole way up. And now you take 8 losses inside of this price action when in the back testing you say, well, I never would have taken a trade there. There's no confirmation of my trade, right? But think about that. If you get an alert, there's 2 hours and 15 minutes of time. The price on the 1 minute actually did give you some decent price action that you could have made some money on, but then maybe you're like, oh, sell again. Oh, sell again, sell again, sell, and you just take loss after loss after loss. because this time is how much time you would have probably spent sitting at your charts. So I'm not going to get into how you guys should be using Forex Replay because I don't even use this stuff. To me, this whole premise that the industry has created, at least from my perspective, doesn't work for how you need to be successful when you go and graduate to live trading, because you don't get to skip candles live. You don't get to say, oh, wow, like, okay, cool. I would have maybe taken this trade and then maybe I would have just like got out of that trade, or maybe I would have taken the buy because the buy makes more sense. I wouldn't have taken that trade. That doesn't make sense. And you were able to see all this price action in a matter of minutes when in reality, you probably were confused for 8 hours. You had no idea what price was going to do, and you're probably taking buy, sell, buy, right? And you're all over the map because your system hasn't been defined across inter time frames. So let's get into the meats and potatoes today, guys, of the video. And let me just go through how I believe you guys should be backtesting so that you can actually create a system that then you start forward testing faster. Too many people are stuck back testing, and they're back testing professionals. They're like, oh, I'm the best back tester, so I'm going to have the best system. And then they're the worst traders, right? Because they don't actually know what they're doing when price is ticking live. So from my perspective, I spent very, very little time in these pieces of software, and I spent much more time forward testing my system because I wanted to be good at the live charts, not the historical charts. Those don't matter. I wanted to be able to predict price and read what price is doing in live conditions. And this is what all of you should be striving for and getting away and throwing in the garbage the back testing tools, because they don't help you. They just create a psychology block that you think price is printing faster than it really does live. Therefore, do you have the capacity to sit there for 8 hours? Or do you understand how to adjust your bias for those 8 hours and maybe buy that price action and then leave the charts? Right? There's so many different ways and facets that we have to think about our mental state and your ability to be good live. So let's go to the charts and let's get into how I think my idea can help you guys get better and better at your own backtesting system and forward testing system. Hey folks, so what is the true purpose of backtesting, right? Well, the true purpose of backtesting is to find an edge, right? We're trying to find an edge in the market that gives us a statistical advantage on a daily or weekly basis. Some days you're going to take losses. Some weeks, ideally, if you have a good system, you'll net profitable. Especially if you're trading the 1 minute chart or lower, because there's so many opportunities for you to get into the market that if you have a really good edge, the edge will play out quicker. If you're trading a higher time frame like the 4 hour, then you might have a bad week, and then you're going to have a couple good weeks inside of a month, right? Because there's less opportunities. But the point I'm trying to make is that the purpose of your back testing, or the study time, and I should actually even just say that, it's not necessarily just back testing, it's just study the chart time, right? We're studying the charts to find an edge. So how do we do that effectively and efficiently so I don't have to be a backtesting fiend and pro and I'm so addicted to it and everyone's like, oh, you got to go backtest? No, we don't need to backtest. What we need to do is find an edge. So how do we do that? Well, what I did was I started to look at the market movements. So again, we've talked about these different models, but as price was making structure on the higher time frames and lower time frames, regardless of whatever trend you're looking at,
I was studying what took place in very pivotal zones. So I've talked about these in different contexts for you all in YouTube around transitional market zones, pivot zones, and then these are going to be structural zones, right? So however you want to call them, these areas of price are the most pivotal for you to actually look at, because as price starts to make internal structure on the lower time frames, we start to study how price actually changes its order flow delivery inside of these zones. That's the key, folks. I started to look at where price actually changes so that I can make money, right? Because if price is going up, up. Let me actually zoom out here because these drawings are not very good. Let me just zoom out. So if price is going up, right? It can't go up in a straight line. That's just not how markets move. So I started to look at, well, how do I know, or where's the best price that does this? And then where's the best price that does this? And then, right? And so I started to look at, oh, wait a second, how does the left make this price action? And then if price is actually trending, what would cause this? And what would cause this? Because once I started to understand how price actually moves and holds its integrity inside of trending markets, and then does not hold the integrity of trending markets, I understood where the best places are that will cause changes in the market. And where price changes is where you make your money. I don't care if it's a trending market, this is still considered a trend and a change, because at some point the pullback was bearish and then the continuation goes bullish. So to be a very good trader, we have to understand the changes in the market. This is your money maker. So, no matter how much backtesting, some random strategy that I found on YouTube, it never worked. Nothing ever worked because there was no way for me to understand the changes. No one was teaching how to actually catch the trend. Everyone's like, okay, we'll buy the dip. Okay, well, where's the dip? Right? Do you understand? Like if price is falling, buy the dip. Well, do I buy it here? Do I buy it here? Do I buy it here? And what happens if it keeps going? Do I buy it here? When do I stop buying the dip? You see what I'm saying? No one was teaching how to actually understand the transitional market zones, and that's what I set to find out. So let's go into the charts and just give you a couple examples on how you can implement this, and then guys, refine the way you look at price and how you backtest. It's very important.
So number one, what I talked to you guys about many, many times in the YouTube videos is I started to look at how price interacted with between supply and demand and structure. Okay. So first and foremost, if we start to map internal pullback structure, right? So we're coming into a zone, right? And if you're starting brand new, you're going to say, okay, well, I know on the higher time frame, there's this big supply zone here. Okay. Big supply zone. So if that's the case, and that's how you're starting out, and you haven't redefined your system to be able to understand exactly and pinpoint things like this, like why did price reverse from here, which I'm not going to specifically get into today. We're talking about how you guys can create a system for testing your own ideologies and price. But if this is a supply zone, then what you would be doing is saying, okay, what did price do inside of this higher time frame that I could have caught a trade, right? How do I understand when maybe my trigger points are in the market for price to actually make me some money? And this is going back, guys, to my OFC candle and how order flow delivery starts to actually change your ideologies. How what price does can inform you of what you might be able to do now to make money. So if we look at this, first and foremost, what I started to do is understand what is taking place on the left. what did price do as it moved away from this previous zone way over here, which is a weekly order block? Okay, this ended up being a weekly order block. So what did price do as it moved away from that zone? Well, as price moved away, okay, we broke some internal structure. But if you look here, right, higher low, lower high, break, and then a pullback, and then this is the last higher low candle, right? So if we use our inducement model, then this wick here, because it had a pullback, it didn't actually mitigate the origin. Then the true break of structure is right here. This is all mitigation pullback. Okay, so you had an up thrust, which created a higher high, and a mitigation. The mitigation finally broke structure, and then price actually created equal highs. So we have liquidity. So this is what you need to do for your back testing. Start to read price and understand it. Don't just mark zones. Don't be lazy. Start to understand how price actually moves away from these zones that allows you to either catch that initial trade, or when price comes back into it, how you could have caught this trade, because this trade ended up actually sweeping the equal highs. Okay, so we swept the equal highs, and then after we swept the equal highs, what did price do? Well, price actually broke structure, right? If we use the inducement model again, this pullback right here from this bullish candle was inducement, because that pullback never mitigated the origin of that transitional market, because this 15-minute candle, guys, was bullish for 14 minutes, and it made an internal new higher high. That's a higher high. So when price pulls back into the origin of this candle right there, and then makes another higher high, and then breaks structure, well, that's a chalk. That's actually a chalk. That's a high and then an immediate low break. So now you know, based on price sweeping that liquidity, that you have now new supply there and you can look for a sell. That's a way to create a system now that you've just done some homework on and said, okay, well, wait a second, price just tapped into this supply. How it moved away was important for me to understand. And then when price came back up to sweep liquidity, well, then there's a lower time frame trade there, and that's a 17 pip trade. That's money, folks. That's money on the lower time frames that you could have got involved with. So what I'm trying to propose to each and every one of you is, when price starts making highs, right? High. Okay, so we have bullish intention, but wait a second, price broke the low. Okay, so price broke the low. That's a chalk. And what did this do? Well, this inducement didn't do anything. So we have supply here because we have now internal inducement, and we could have been maybe looking to short that market. Now, this is obviously an Asian session, so you wouldn't be trading Asian session, but if that was any other time of day, that's 18 pips. That's a really nice trade. And you start to understand as you look back in price, wait a second. So as price was falling, we swept this liquidity here, and then all of a sudden we broke structure. Oh, that's a chalk. So where did price fall back to? Well, it created a bunch of inducement liquidity, and then it came back to the origin flip. Oh, okay. So now I'm starting to put the pieces together of how price actually moves as it's expanding. And then what you do, folks, is once you start to see an edge, that's what I'm trying to get you to understand. Once you actually identify an edge, now we go into this price action, and we actually start to understand how price moves in those zones. So wait a second. If now I understand that this is an area of interest for me to buy, I'm going to do the homework, and I'm going to start to say, okay, well, hey, wait a second. Price made a lower high, lower low, lower high, lower low. Oh, we failed to run this low. Oh, it created some inducement liquidity, and we had our internal boss. After we had our internal boss, price ended up coming into this flip zone. Oh, okay, cool. And then boom, it ripped away. But wait, it didn't mitigate this. That's interesting. So does price actually care about that? Oh, it does care about that. Okay. So then how do I get into this price? Oh, wait a second. We have a boss. We hold the low. Oh, I probably could have bought there. That looks like a probable edge in the market where price OFC comes back into the origin and OFCs again. Oh, okay. So we've done basically homework that says, okay, we bossed. We made a higher low. Oh, we bossed again. Okay, cool. I'm going to enter that trade, stop below this low because I've done the homework that says that this is a valid zone to take a buy on. Do you guys understand what I'm saying? Back testing is only a tool for you to go back and look at how price moves, and then you create an edge off that, and then you forward test it. Because if you can't forward test it, it means you didn't understand it. Do you see what I'm saying? If you cannot do what I just did here live as price is ticking, then you will never be able to trade live, ever, no matter how good you are at your back testing. So, this is going to be a short and sweet lesson for you all. But the premise of this video is to go back and understand as price is printing higher time frame, lower highs, lower lows, inducement liquidity. Oh, we came back into the origin. Oh, we broke structure. Oh, it came back into its origin. Okay, we can sell. Then we have to understand how we can actually get involved live. Create your system by going into the past and seeing how structure actually moves, and then implement that system so that you can do live trading. This is a trade I took last week in the mentorship group. So I end up getting this trade off this origin wick that was missed and never mitigated. And let's just move my trade so you can understand my entry. Price came right into the origin wick that mitigated the flip, put in the low, all this inducement liquidity, price mitigated it, and I captured a trade. This is the way I'm able to get into these trades is because I have studied price. And then I can do it live, forward testing it, right? That's the key, folks. It's very, very important that you guys get off of this idea that you need to be a back testing professional. And instead, you need to be focusing on how price moves away from zones. What does structure do on the internal and external? So if we go to a 4-hour chart, how is price moving on a 4-hour chart? And then when we understand that price came into this origin on the 4-hour chart, how you could have got into a trade on the lower time frames by putting the pieces together and fractally going in and studying price. Actually studying price, not marking random zones and then hoping that you get a trade there by clicking the button 5 times in your backtesting tool. That's not going to help you get better. What's going to help you get better is studying every single interaction as price moves. And what I do for the group for my weekly outlooks is I mark certain zones that I believe the weekly might come and mitigate. And this week, price ended up printing a doji. And let's just stop for a second. And what is a doji? A doji is consolidation on the week. And just take a quick second and listen to what I said in my weekly recap this week for the group.
This is interesting. We were in a very interesting spot. This could create a drop-based drop. So we might have some consolidation this week.
And we were able to get in buys and sells as price moved inside of this range. Because even though price doesn't come into my weekly zone, it will absolutely come into daily zones. So I had a few buys off wicks in the day. I had some sells off the wicks of the day. This is how you guys can start to make your intra-week price action trades while also looking for potential weekly mitigation ideas. So I hope you've taken a couple nuggets out of this video and changed your perspective on what it takes to truly be able to study price and move into live trading, because it's not the same. as backtesting in these pieces of software that everyone wants you to use. They're hindering your ability to do things live because maybe you just haven't studied price enough fractally to be able to get into your intraday, intra-week, and weekly trades. Okay? So I hope this has been helpful, and we'll see you guys on the next one.